Okay, people, listen up. It's 2024, and the whispers are starting. Remember 2006? Look familiar? The Fed's hiking rates, salaries are stuck in the mud, and foreclosures, they're not plummeting, they're creeping. We're not screaming bubble, yet. But someone needs to ask, what happens when the music stops for all these Floridian condos? Global Credit Solutions, sound familiar? They're packaging subprime plus mortgages, loans that make 2008 look prudent. Default rates are quietly spiking, hidden in the fine print. And these McMansions popping up in Nevada? They're empty. Vacancy is the new black, folks, and black is not a good color for your portfolio. Evergreen Estates CEO is touting unprecedented demand. Right. But Dr. Anya Sharma's data? Unsold inventory is quietly piling up. Builders are incentivized to build, nobody's incentivized to buy when rates are sky high and job security is shaky. We've seen this movie before. The ending isn't pretty. Liberty Savings downgraded. Construction jobs tanking. Consumer confidence taking a nosedive. These aren't isolated incidents, they're connected. These are symptoms. The foundation is cracking. We need to dig deeper, and we need to dig now. This isn't just about houses, it's about everything. Remember 2008? They're at it again. Affordable housing, they call it. But peek behind the curtain. We're talking stranglehold mortgages from shady lenders like New Horizon Finance. Adjustable rates, balloon payments. It's all smoke and mirrors designed to keep payments low now, exploding later. It's not affordability, it's deferred disaster. Wages are flatlining, prices are moonshotting. How can anyone afford a home? Enter United Hope's down payment charade. Sounds charitable, right? Wrong. It's a second, silent mortgage, burying buyers in debt before they even unpack. They're simply masking unaffordability with more debt, a ticking time bomb disguised as help. Washington's promising homeownership, but who benefits? Secure Housing Initiative throws billions at subsidies, artificially inflating demand. It's a sugar rush fueled by your tax dollars, lining the pockets of developers like Omnicorp while pushing prices even higher. The fix is in, folks. This isn't a solution, it's a setup. History doesn't repeat, but it rhymes. These innovations are just rebranded versions of the same toxic loans that crashed the economy before. Interest-only loans from Evergreen Lending, Ninja loans repackaged. They're betting you'll keep paying, even when you can't. Don't be their sucker. This isn't sustainable. This is a rigged game. They call it diversification. I call it devastation. Blackwood Investments, Capstone REIT, these institutional sharks are vacuuming up single-family homes faster than you can say mortgage crisis. They're not building communities, they're building portfolios. And your dream of homeownership? Just another asset class to be squeezed for maximum yield. Global Equities Group, a hedge fund masquerading as your friendly neighbor, is weaponizing algorithms to outbid ordinary families. They use predatory lending practices, driving up prices, and flipping properties for quick profits. The result? Local communities gutted, families displaced, and the American dream turning into a nightmare. Don't think this is just about buying houses. These firms, like Titan Capital Partners, are packaging these mortgages into complex securities, selling them to unsuspecting investors. Sound familiar? They're creating synthetic debt instruments that could implode the entire market, again. This is '08 all over again, but with a new face. Look at this wasteland. United Property Ventures promised revitalization, but delivered only stagnation. They're hoarding properties, artificially restricting supply, and driving up rents. This isn't about providing housing, it's about controlling the market, extracting every last dime, and leaving communities to rot. Get out now, before it's too late. Global instability isn't just headlines, it's housing market poison. Wars in the Zargath region choke commodity flows, spiking material costs. Inflation, already a monster thanks to Jerome Powell's reckless spending, gets juiced further. Suddenly, affordable, new builds are priced out of reach, demand craters. The dominoes are lined up, people. Zargatha's unrest triggers a cascade. Higher rates kill construction. Consumer confidence plunges as energy bills explode. Home sweet home becomes home sweet debt. Panic selling is inevitable, pushing prices down the cliff, faster than you can say, subprime. Government solutions. Don't hold your breath. Secretary Miller's Housing Stability Act is just another handout to cronies, masking the rot beneath. They'll fiddle while Rome burns, lining their pockets while families lose everything. Remember 2008? This time, it's globalized, amplified, and weaponized. The vultures are circling. Ironstone, Citadel, they're waiting to scoop up distressed assets for pennies on the dollar. This isn't about homes, it's about consolidating wealth. The perfect storm isn't an accident, it's a calculated transfer of power. Protect yourself, before it's too late. Okay, people, listen up. The game's rigged. Housing's a casino. Diversify. Think stocks, commodities, anything but relying solely on inflated real estate. Remember the '08 crash. Brenda and Frank lost everything clinging to that McMansion. Don't be them. Protect your assets. Debt's the enemy. Target high-interest liabilities like a heat-seeking missile. Credit cards. Gone. Car payments. Vanquished. Lower that mortgage, or better yet, consider renting. Remember what happened to the Griffiths when interest rates spiked. They were underwater faster than the Titanic. Location, location, location. Forget it. Affordability is the new mantra. Think beyond coastal cities. Explore smaller towns, different states. The Peterson family sold their overpriced California bungalow and bought a ranch in Oklahoma. They're building wealth, not just paying interest. Think outside the box, people. Tiny homes. Co-living. Don't scoff. It's about survival, not status. Prepare for the worst, hope for the best. Build an emergency fund. 3 to 6 months of expenses, minimum. This isn't fear-mongering, it's financial self-defense. Get ready.